The U.S. Central Bank is leaving its interest rates untouched for the first time in more than a year, saying it wants to gauge the impact of 10 previous hikes. Hong Kong banks are following suit by keeping the prime rate frozen.
The Hong Kong Monetary Authority announced that its base rate will remain at 5.5%, following the U.S. Federal Reserve's decision overnight to leave its benchmark rate unchanged. Although it's a slight reprieve for borrowers, the rate is still more than 7 times higher than last year, when it stood at a historic low of 0.5%, before gradually rising 10 times, with increments ranging from 25 to 75 basis points.
我哋港息係高息環境咧，都可能係維持一個較長嘅時間。
HKMA Chief Executive Eddie Yu warned that the pause does not imply that the upward cycle is over, adding the local interest rate will likely remain high for some time. The city's biggest lenders are also staying put. The prime rate for HSBC, Hang Seng Bank, Standard Chartered, and Bank of China stays at 5.75%, much to the relief of homeowners and others taking out mortgages. The hiatus came after the U.S. Central Bank confirmed that it will not bump up its key interest rate. But in a surprise to market watchers, its chairman signaled 2 more increases.
Nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy.
Aggressive monetary tightening is working. Inflation in the United States dropped from 9.1% a year ago to just 4% last month. But the goal, Powell said, is to bring it down to 2%.